So let's check the international markets, see how they have finished the trading week. We're going to start in Europe and see how that is looking. We can see all in positive territory. The FTSE up as well as the DAX in Germany, across on Wall Street. Also very positive, the Dow gaining 184 points there, the S&P 500, and tech stocks also on the rise. Let's get more on this and economic news in general. Also, we're joined by Peter Esho from Esho Research. Peter, welcome.
Thank you very much.
We'll start in the United States. Obviously, Wall Street feeling a little more positive today, given the uncertainty of the Trump administration. Is it still fairly mixed because investors don't know exactly what to expect?
I think there's uncertainty politically, but economically what the market's saying and what the market's pricing is that there is actually certainty. We're seeing in the past fortnight a president that got elected on a mandate coming and putting in changes, and the market's reading that as a sign that the economic package promised will be implemented. And we're seeing the Dow Jones average now at historically high levels. It shot up last night through 20,000 on the back of bank regulation changes to policy, and so the financials were very strong. So while on the political and on the social front we've had a lot of uncertainty, it's been in the press every single day. From an economic point of view, the market's seeing this as a positive. And it's not just the US market, even the Australian market, the interest rate market, the Australian dollar, which is a risk currency, now just shy of 77 cents.
All right, I'll just take you back to that point that you're making about banking regulation, because the US President Donald Trump has announced a review of those regulations which came in post-2008. What signal is that sending? What might we expect should there be changes there?
Look, the market, the big changes are going to be on taxation and what Trump proposes to do to the broader tax base and what that means for corporate profits. And that's why the stock market's running up really, really hard. And that's why the bond market is pricing in interest rates to start rising, because the expectation is the economy is going to really kick off. A few weeks ago, if you had asked me, I would have been probably on the fence. But I think I've formed a view that this is a real economic recovery. And this is a bit of a steam train now going up. And for a lot of investors, it's important to distinguish between the politics and the financials. Something very significant is happening to stock markets, to interest rate markets, to all markets around the world. If you're an average investor watching this thinking, how does this impact me? The value of your superannuation fund has moved significantly since November. So I think it's very important to recognize that the market is taking Trump on his word and forming a view that he's going to push through a lot of those very significant things that a few weeks or a few months ago were thought of as just fairy tale promises.
But I mean, just on the points of the banks, he's looking to unwind some of those regulations which were put in place to prevent a GFC, to prevent Lehman Brothers, for instance, another collapse to that scale. Is there a danger, perhaps, that they'll unwind it to a point where there'll be a little nervousness?
Oh, definitely. If you have a look at history, the Republican Party always comes in and unwinds regulation, and then at some point after that, it's usually the Democratic or the left side of politics that comes back and implements the safeguard measures. This is nothing new, but I don't think that's why the market's repricing. I think the market's really looking at the tax element and the corporate tax promises. To say 15% corporate tax, it sounded crazy during the election. And many are sitting back now saying, well, you know what, he's probably going to do this, and it's going to have a huge impact. So there will be repercussions to policy changes, but I think the market's just really eyeing that taxation element and what that means for companies.
So when we come back home to Australia and we look at what's happening here, you're anticipating rate rises obviously in the United States.
Yep.
Are you anticipating that might be the case? We've obviously got a meeting coming on February. Is that too soon to, on Tuesday, is that too soon?
We've been having a discussion now for well over a year. And as you know, I'm a glass half full kind of person. I'm always on the optimistic side. And I think I've been vindicated this week because we just had a trade surplus come out, our largest ever. A huge trade number for Australia, a very positive trade number. The Australian dollar has gone from about 71 US cents at the turn of January at the beginning of the year to now just under 77 US cents. So it's not just me, but the market is pricing in a higher dollar, higher interest rates around the world. I think it's going to be very, very difficult for the Reserve Bank to cut any more when you have such a large, strong trade surplus, and I think interest rates can only really go up because they've fallen so much. They've fallen to historically low levels, levels that we've never seen. So to me, the growth trajectory is on the way up. Now, when that happens, there's going to be implications, good and bad.
Well, as far as the Aussie dollar is concerned, for instance, likely to rise once interest rates start going up?
Yeah, I think I wouldn't be surprised to see the Aussie dollar break through 80 US cents. Now, you and I have spoken about currency forecasting in the past and how it's a mug's game, and you should take that with a grain of salt because a whole range of things can happen. But it looks to me that the Australian dollar has broken through the 70 to 75 cent range. It looks like it wants to push further. I think we will see it test 80 US cents. And if the GDP numbers come out for the last quarter, because keep in mind, the previous numbers in Australia were negative. So everybody was talking about a recession. Oh no, will we fall into a recession? I think that'll be absolutely smashed out of the park. And when that happens in the next couple of months, I think you will see momentum in the Aussie dollar. And that will be because the market's pricing interest rates to start rising.
And of course, the other critical side of the interest rate ledger is property, isn't it?
Yeah, there's some property benefits, other property doesn't. And I think that's very, very important. And that's why I really want to make the message for people watching that what's happening in the US is very significant. You can't just ignore the economic side, because when rates do rise, there will be winners and losers. The investment side of the ledger that can price in higher rents, because when interest rates rise, it's because you have inflation. So if your rents are going up more than your repayments, you're actually benefiting. But if you're an owner-occupier and you've taken a huge amount of debt and you can't offset that by wages growth, then you have a problem there. So that will be revealed, and there will be parts that benefit and other parts, unfortunately, that don't.
All right. Well, it's interesting, Peter, because our previous guest from last week was forecasting that next move by the Reserve Bank would, in fact, be down. So, I mean, there's certainly not conformity among those people out there, including yourself.
I think, in fairness to your guest, between your guest expressing those views and me expressing these views, there's been a very strong trade number come out during the week.
Fair enough.
And that's very, very significant. So in fairness to your guest, I think your guest might reevaluate those assumptions given that number.
Peter Esho, thanks very much.
Thanks for having me. Thank you.